Welcome to Investors Hangout, brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. With me is the CEO of Value Research, Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
Today, we're going to be talking about hybrid funds. As you all know, these funds invest in equity and debt. Dhiren, do these funds automatically rebalance the portfolios and maintain the required asset allocation, as has been communicated about these funds?
Yeah, broadly, the kind of funds which most investors should be using, they have a defined allocation. They invest in equity and debt in a certain proportion. There is a set of hybrid where the discretion goes to the fund manager, that he decides where the money should be, whether it should be fully in debt, fully in equity, or 90% in equity, 10% in debt. So that is his choice. Those are called asset allocation funds. But we are not talking about them. I look at the utility of hybrid funds as any investor who is getting started should start only from these funds.
Okay.
No investor should for all your long-term money, this should be the starting point. We keep saying that.
Okay,
And
there is a reclassification that we're talking about, and I would like you to touch upon that, because this reclassification has brought in a lot of subcategories to the hybrid funds within the hybrid fund space. So, can you demystify this new hybrid, the new hybrid categories that have come in, and help us to understand how relevant these are for us?
No, all kind of hybrid funds existed before.
Okay.
The reclassification has just formalized it. The reclassification has just gone about, organizing, stating it with clarity. There are 5-6 kind of hybrid fund. One is what I was referring as the asset allocation fund or the arbitrage fund.
Okay.
But they are not mainstream fund. I think, the starter funds, the funds which investors should use, should be the fixed allocation funds. There are funds which are 25% equity, 75% debt.
Okay.
These are meant for, a very conservative investor. Then there are funds which are equally into equity, equally into debt. And they keep rebalancing often. It could be on a daily basis, it could be on a weekly basis. So that is a fairly stable vehicle. And then you have, the old erstwhile balanced fund, which is now called aggressive hybrid fund. They are 75% equity, 25% debt. It is a conservative take on equity. It does not scare an equity investor, though it is dominantly an equity fund. So these are 3 primary categories which any investor should start with. Rest of them you can safely ignore, because they are there for legacy reason. They are useful for some sophisticated investor or somebody. I think most investors can do without them. But these 3 are very useful categories. They are meant for people who have no exposure to market-linked investments, because Indian investor, there is historical experience of investment is that I will invest, how much will I get? This is the starting point.
Right.
Indian investor has been historically a fixed income investor. And the moment you get into something where you say that I will invest, but how much do I get? And your answer is that I don't know. Then how scary it can get. Then you say that it can get very scary. It can go down in value substantially. So these are the kind of these hybrids are very useful from that standpoint.
Okay.
It helps you appreciate the market volatility, market link, the lack of guarantee of return, and benefiting from it. So they are. I think anybody who is investing in mutual funds or market linked investment, these are great vehicles to acclimatize yourself with them.
Okay. So what Dhirendra is saying is that there are 3 groups under which the hybrid funds fall in. 1, conservative hybrid. 2, balanced hybrid, and aggressive hybrid. Now, would you like to put an investor like me into these categories, or would you like to explain to our viewers which category they should choose and which category they should fall into?
An investor like you.
Shall we go?
Sorry?
No. Shall we go one by one? Unless you're putting me into some category.
No, I'm not putting you in a spot. But the fact that I have known you for 5-6 years, so you don't fall into any of these categories. Just that I have initiated you into mainstream equity funds by now.
Yes.
But Yes, I would like to go one by one. The conservative hybrid funds, the fund which invest a maximum of 25% into equity,
Yeah.
remaining into fixed income, they are very stable. They don't give you nasty surprise. They don't go down in value by 30-40%. They are also useful for income investors, because many investors, they realize that they have to optimize their return.
Okay.
Fixed income return will not be good enough. So these vehicles are good to optimize your fixed income. You can also derive periodic income from them without substantial loss of principal in the interim. Of course, you have to be careful about the withdrawal rate. And
So, in a nutshell, conservative
very
hybrid,
conservative investors,
for regular income.
for regular income as well. But more importantly, when you have to invest for regular income, one caution needs to be exercised, which is, if you have 10 lakh rupees, 50 lakh rupees to invest, don't invest at one go, even in these funds.
Right.
Because reducing the possibility of catching a market high with your 25% allocation to equity through these funds is also worth avoiding.
Yeah.
So
So SIP is the
so SIP for 6 months, 1 year is also important here when you are investing a large sum of money to derive income.
Okay. If we talk about the balanced hybrid, where 50% is equity, who falls under it and how do they get?
These are wonderful vehicles. Unfortunately, we don't have too many funds which are stated like that, because most of the funds in this category officially are, accidentally falling into that, the children fund and the retirement funds. But I see a great promise in this category, because this is a fund where, if the market is volatile, sometime equity does well, sometime fixed income does well, their ability to rebalance it. And I think, in your retirement, all said and done, we become a little less, we are averse to risk. We get uncomfortable with big slide in value, decline in value. So these are, balanced vehicle. And in a market where they also stand out for their performance, many a times they have beaten equity fund, because there is a long phase in the market when equity doesn't go anywhere, but in the interim it will be going up and down. Market has this character. So these funds stand to benefit from that.
Okay, and now lastly, the aggressive hybrid where 75% is in equity. So who's this investor?
This investor is what you were 5 years ago, who had never invested in equity and was a long-term investor. Is still in the accumulation phase. He still has 10-15 years to invest. Everybody should start with these funds, not start with a sector fund, which most people get carried away by looking at the recent past performance. So long-term investor looking to invest in equity, they should start here. After 3 years, you should move your money to the multi-caps and large and mid-cap funds. But this is the starting point for all growth investors seeking sizable, handsome return, but investing for the first time.
So if you want to be that kind of investor who's smiling like me sitting today because the Rain's advice has benefited me quite a bit, then go for the aggressive hybrid fund. Correct?
Yeah, sure.
Okay. I'm giving him all the credit for
no, but
whatever little I have.
But most of the credit actually goes to giving advice is easy.
Yeah.
Doing it month after month and not getting
bogged down
by intermittent decline.
Yeah.
I think that's so you deserve it.
Okay, thank you
for your actions. Yeah.